Good morning. So we are here for a new week starting after the very nice last week we had with our long USD and short stock. So I'm starting today with S&P 500 because it's really an important one for me and probably the biggest trade I am doing now with USD long. So we called last week at 4,552 a short, which was right in that top, and the reason why we had this level is a confluence of some ABC that I will show you. I wanted to start this with a blank page chart because I am looking, or I am thinking, we are just near a potential very big correction, probably up to there, not probably up to there, sorry, probably much lower even if we look on the weekly chart. So I'm looking for a correction to this area. So that's really a big move we could expect on the S&P 500, and the reason why I will explain it right now. So that would be the target area of this move, if of course what I think is confirmed. So we would have a really important move to this area, and we will see the level right now. So let me take off this, and we can keep that one for the moment. Okay, so let's start with the beginning. We have been shorting S&P 500 right on the top that we have been calling like 10 days before we went there, 4,552, because we had a confluence of two ABCs. So we had this blue ABC topping here on the one-to-one extension together with this black one. One is a daily, one is a weekly. And casually, like always in this market, we had a total, complete confluence of this top there. That's why I am looking at it very, very closely, because it doesn't happen so often we have such a thing. So it can be a coincidence, but I doubt it. So that's what we did. We called a short here. We had a big, nice bearish candle last week. And that's something we already had in the past, and then we have been bought back. So you see how this daily ABC has been working. The 236 level here has been working very nicely here. Here too, with the 38.2, we came inside, bounced from it, and came back up, as we did on the 61.8. Same thing to the pip, and then finally reached this 4,552 level where we shorted it. So I am really interested with that, because this one is a monthly. So on this monthly, I took a little bit different. I'm not using Fibonacci candle on this one because it's a well-defined ABC. I like it a lot. And when I found it, I was really a little bit surprised by what I saw. So we see it has been working well too. It has been holding the price. Here it's a confluence, but you see how the 61.8 of this monthly became the bottom of this daily ABC. It's really very, very nicely done. Here 38.2, we bounced from it, came back to the 50%, 61.8, and you see how we have been respecting this very nicely here with the 76.40 to reach this 4,552, where we shorted the S&P 500. And one of the target I'm looking at is this for 3,525, which is mostly the area I was showing a little bit earlier. I put this one, but it would be exactly something like this, where we could see S&P coming back, and why not double topping there? It's very possible too. So the reason why I'm looking at that is another thing. So now we have seen the level. We will lock this rectangle, and I will take off those ABC to have a cleaner chart. So we know why we are here, we know why we shorted there, and we know all the level we have on the way down. Now, let's point out something different. I've been working since the beginning on this nice trend line we have here for almost 1 year, a little bit more of 1 year, from September 2020. We have here a double confirmation, even triple confirmation, and we had one there. And we stopped right here on the 4,552. Just to remember, which is the one-to-one extension of our two ABCs. The other thing I am really interested in is this trend line. So this trend line was the original wedge I've been working on since the beginning. And this wedge is that one. This is what I've been working on since the beginning. So of course we have different options here, but my option is the one I will explain now. So we have different options. We could, of course, change this trend line, put it on the last touch we have, which is not that one, but would be this one. So we could have this one, or we could do some intermediary. If we take this one to there, let's put it very nicely, very precisely here. Not always easy. I will change the color so we can see it better. So that would be one of the option, or we can put it here, or we can put it here, or we can even put some different one with the line going from this one to that one, which would make something like this. That's why the trend line, I love them, but I am very careful with them because in many cases we have a lot of drawing option on those one. So, and that's something I dislike because it's not something, let's say, too many options. So it's not as clean as the ABCs or the level we are using in our trading group. So if I draw it correctly, that would be some option that many probably are looking at now, this one or that very long-term thing. I don't, how could I say? I don't like them so much. And I love the big one here, which is my guideline. And the reason why this one has become my guideline is the following. Let's put it on top of everything. The reason why is it's the original one. Then what we see here is that we never ever been able to close under this trend line on a daily basis. And we must remember that the small time frame are not the time frame that control I would say the market. The market is not controlled or is not managed on a 1 hour or a 4 hour chart. The minimum is daily or weekly. So when we look at that, what do we see? We see that this trend line has been perfectly respected at the end and only spike a little bit under it, and then we came back to close above it always, always, always. But, and that's my big but, here this week, something happened. We have a close, a weekly close, and we have a daily open under this trend line for the first time. And that's very important to me because it means we broke an important area. We could have broken an important area. So we have this one. We have the fact that we have a double perfect to the pip ABCs at 4,552, and we have, of course, the fact that we have been so much overstretched all the way up. So I am thinking this can be the beginning of something. It can be the beginning of the correction we have been waiting for, all the market has been waiting for a really long time. And that's what I think we will get. So I am till we respect those high here at 4,552, and I think we will respect them. We could come back on a spike, but on a daily close, we should always come back under this line, this trend line. And it's not only a trend line, we have some ABCs fib in the area. And you see how well the small other trend line are in confluence with our 78,676 for fib of this ABC, which is the first target. So if we look at this small ABC, we have all the levels where we could bounce, come back, and we could probably see something like this. So we would come back here, bounce a little bit, then come back, then go to the 61.8, and like this, unless we get a big event that would make us break faster or whatever, and we could get this till we come back to this level here. When we would come back here, that would be the first big thing to look at. Are we double topping here or not? But when we will come back here, you see on top of that we have the 61.8 of this big ABC we have there. This one is a big one. So let's put it really big. And you see at the same time how we have it here together with the 61.8 of the black, of the small one. You have this big 76.4 there. So this one will be a very strong area for sure. We can highlight it. And I do this today because I really want to have my roadmap on it. Of course, this level will be a very important one because it's the bottom of that one and because it's a 61.8, of course. And then we will have this 50%, 38.2, very important too. But the idea of this would be that we would pull back at least to the 38.2 and probably up to the 236. And you see, since we have created that ABC, we never ever came back to retest this 236. So that would be really a fantastic entry, probably if we would have this level there. So that's what I'm looking at. That's why I just explained why I'm looking at this event here and the close under this original trend line as something important to me, due to the fact that those spikes are not closing this daily candle, are never been closing or opening under it, and we have the first one here, which happened after Friday candle. And that's why on Friday I was asking and I was calling for a level to be broken. So very important week, I think, and days for the S&P 500. I will stay short, of course, can be long on a scalp or something like that. But due to all what I just explained now, I will stay short on the S&P till these high are not violated. And I think they won't be. I think we could keep that for 2 months or 3 months or more, but that's what I'm looking at. So if I'm wrong, of course, we'll go through it, and that's all. We retest this trend line and come back lower. But I keep a close eye on what is happening right now with this wedge trend line and the level we just mentioned.